Thank you again for joining us today on our Take Action Partners training for the week. My name is Joan Hockenstad. I am a field partner with United Financial Freedom, and I'm one of the leaders on your Take Action Partners team. And I'll be facilitating today, but I am joined by other leaders. Specifically, right now we have Mr. Dale Dix. I'm pretty confident Kai Baker will be on the call as well as Mr. Kevin Benavides. All of us are licensed life insurance agents, so we do have some insight into this, and we want to be able to share that with you. So today is all about recruiting the insurance agent. Now, over the course of the past few weeks, we've been talking a lot about recruiting. This is an advanced training, as have the last 3 weeks of training. We've done recruiting the realtor, loan officer, and financial planner. Today is the insurance agent. As mentioned, these are a bit more advanced trainings. I was reminded a couple weeks ago that with these advanced trainings, it can be overwhelming. And it can be like, oh my gosh, what the heck? I don't know even what to do with what you just said. That's okay. You're not expected to know unless this is really your specific target market. Like I said, it's an advanced training. If you are new to recruiting, I want you to go back and review the overview of recruiting. I want you to review the conversation for recruiting. Those links for those trainings are in the email that I sent out, which was reminding you of the training for today. You can watch those recordings there. And then get out and practice. Get out and start talking to people. There's no better training than on-the-job training, getting out there and actually talking to people. So get out there, learn from the conversations, and then you can always come back and watch these trainings again. Of course, obviously watching it today, you can always come back again later and watch them as well. But get nuggets of information. Don't think you're going to know everything and really soak in every little discussion point that we talk about today, because that's unreasonable. But these are recorded. You can go back and you can review these again. Take one or two golden nuggets from each of the different trainings and try to implement them. That's really what the goal is. So again, today is all about recruiting the insurance agent. That said, I am glad. I know that we have people on here that are not targeting the insurance agent, and that's fantastic, because I do want you to use this as really a recipe. Just because the words are more specific to the insurance agent, the value propositions are specific to the insurance agent, doesn't mean that you can't take the concepts with you to apply to whatever target you are going after. In fact, that's what I want to encourage you to do. It's to take that foundation and build it with whatever target market you're going after. Now, we do these for specific targets because these are my target markets. I am a licensed real estate broker, so I've been in the industry for decades. Oh my gosh, I'm old. So I'm very comfortable talking about real estate. I'm very comfortable talking about loan officers and recruiting them. Been in the insurance world, not doing P&C. I did life sales, and that always went into our financial services as well. So I'm very comfortable talking to the financial service person and to the insurance agent. So I want to encourage you to find your specific target market. I want to encourage you to look at whatever profession you're in now, and then use these trainings as a foundation to build up for that specific target market. If you want to venture out and try some of our targets, by all means, have a good time, but it's always easiest to start where you already know. You have an insight that other people don't have. You have the lingo and the language down. You know what makes people tick because you're in the industry, and you know their hot buttons. You know what's going to make people a little bit upset. You know what's going to make them excited. So you know, and you already have a built-in rapport. So it's always best to start in an industry that you already are familiar with, or even a hobby that you're already familiar with. So despite the target that you go after, the typical recruiting process is the same. There's 4 steps, really. The first one is to gain interest. You need to have an initial conversation. And this is generally where you're going to provide an extremely brief introduction to the program. And by extremely brief, I cannot emphasize that enough. Do not let your invitation become your presentation. If you are trying to explain the program, you're giving too much detail. That is not what the conversation is about. It's just giving a generality of what we do and seeing if that system, that program, our MMA would be something that they would want to instill and incorporate into their core business or be as a plan B or a part of our crusade. So it's a very general introduction to the program. You really want to use the resources and the tools out there to provide the detail. We want to always think that we're training from the beginning. Always assume that the person that you're speaking with will want to become an agent, and you want them to see that they can do it regardless of their background, regardless of their skills, regardless if they're a presenter or a non-presenter. We always want people to think that they can do it themselves. So we want to have as much duplication as possible. We want to use recorded videos. We want to use live opportunity meetings. We want to use events where people are just inviting their target market to attend to get the detail about the program and more detail about the opportunity. That way, our initial conversation is truly a general discussion, and to provide more detail, to provide more information about how things work, they can watch those videos and those resources that are in place. So again, brief intro to the program and the opportunity. Ask lots of questions. Really get to know that prospect. What's their hotspots? What's important to them? Why would that person now want to move forward? We're just going to discuss some of those questions today that I think are truly important in that initial conversation. And then some of the questions are more appropriate for the follow-up appointment. But we'll talk about some of those questions in a minute. Invite to learn more. Let them know what to expect. Hey, I'm going to send you an email that has videos. Hey, I'm going to send you the information to attend a live meeting in our local area. Whatever it is that you're doing, where they're going to get more information, tell them about it in that initial conversation so that they know what to expect. And before the end of that initial conversation, make sure that you've scheduled a time for a follow-up appointment. When will you answer any further questions? When will they have a deadline to have those videos watched? So schedule that follow-up appointment. I like to say it's usually within 12 to 72 hours. That's not always going to happen. People have busy lives, so that can't always happen. That's just the ideal time frame to follow up. 12 hours is if they're having a live meeting in a local area. Following up either immediately after the meeting or up to about 12 hours after the meeting. That's ideal because it's really exciting. People have great energy after attending those meetings. If they're attending a discovery call or a live opportunity call that is via web, then really 24 to 48 hours is ideal. And if they're watching videos, then giving them a deadline of about 72 hours for that follow-up appointment is ideal. So that's generally what we try to do. Obviously, there's exceptions to every single rule. So then step number 2, actually follow through with giving them the additional information so that they can learn more about the program and the opportunity. That's where you send the email with the links to the videos, or send them the email for them to use when it's time for the live opportunity webinar, or the information to attend that live event, whatever that looks like. You now need to give them that additional information. Step 3 is that follow-up appointment. So now they've attended that meeting or they've watched the videos. One of the first questions you're going to ask is pretty important. It's going to be, what did you like best about what you saw? Now really listen to them. What did they say? What did they say was important to them? And then dig a little bit deeper. Usually people's initial reaction is actually not their most important. If you dig a little bit deeper, you're going to find what it truly is. It's related, but it may not be that, because they weren't expecting that initial question. So dig a little bit deeper. They're going to sell themselves. All you have to do is listen to what they have to say. Then ask them, hey, do you have any other questions? You can do a 3-way call with a colleague from UFF to help close them as an agent and to show them that they're in business for themselves, but not by themselves. That if you're not available, there are other people that they can contact to get questions answered and assistance. And then guide them to join. Guide them, hey, joining as an agent is pretty easy. Here's a link. Let's go ahead and follow through and get this information completed now. And then, of course, step number 4 is begin training and support. We really want to make sure agents are starting with a really good foundation and that they're starting strong and quickly. Usually if somebody can put a check in their pocket in the first 30 days, they remain as a good, loyal, and strong advocate of the Money Max account system. They remain a good agent. So that's really our goal, is to get money in a pocket from a sale within the first 30 days of somebody to become an agent. So keep that in mind as you recruit somebody. Obviously, don't wait to recruit if they are like, oh, I'm not sure if I can do that right away. That's okay. Get them on board, but just follow up with them. Our goal, again, exceptions to every rule, our goal is to have a sale within the first 30 days. And if they're out there running and they're jumping in, learning how to swim as they go, that's even better. Get them into the Fast Start 3-2-1. All right. So when when you are recruiting, remember though, that most people will join for one of three reasons or a combination. If the first reason, especially if you're targeting a specific profession, is to grow their core business. I love to go after realtors, loan officers, financial planners, and insurance agents because it's a phenomenal way to actually integrate it into their existing business. They can put it in as not only an additional revenue stream, but it helps them enhance or make their profession better. So it just makes their current business better. It's not a distraction for them. Now, plan B, or the second reason, is that people are looking for a plan B, or it could be plan C, D, E, whatever it may be. They're looking for an additional source of revenue. It could be both core business and an additional source of revenue. But people with plan B, they're typically looking for that additional source of revenue to help them be recession proof, or to help get them over the hump, or to help just get a little bit more money coming in, or quite frankly, a lot more money coming in, depending on their motivation and the time that they're willing to dedicate. The third reason why most people join as an agent is through crusade. They believe firmly in the mission of the business. They know that there is a debt issue in the United States, and they want to help people with that number one issue on their minds, and that is debt. So it could be any combination of those three things, but those are the typical three reasons why somebody would join. For me, quite frankly, it was originally plan A, or I'm sorry, it was all three: grow my core business, plan B, and a crusade. And then I just kind of ran with it. So now I just focus on it. It's not my plan B. Anywho, knowing why somebody is wanting to move forward is going to help you. It's going to help shape your discussion points. It's going to help you highlight specific value propositions so that you can say that, hey, you remember when you said you wanted additional sources of income that were related to your business so you didn't have a distraction? Well, let's look at blah, blah, blah. So it helps you really form your presentation for them. Because remember that this is all about that old radio station, WIIFM. What's in it for me? That radio station is not about you. It's not about me. It's not about Dale. It's not about Frank. It's not about Kevin. It's about the prospect that you're speaking with, the person that's sitting in front of you. What's in it for them? So they're coming from the perspective of WIIFM. What's in it for me? So with that regard, you do need to get to know your prospects so that you can actually say the value propositions that will in fact be important to them. And so in your initial conversation, you should ask about their specialty in their respective field. What made them get into the field? How long have they been working in the industry? Who are their ideal target markets? And you could ask, this might be a second appointment of question. It depends on how that conversation's going. Again, you have to have a little bit of a feel going on, but you could ask, how's the economy impacting your business? How are the tariffs right now impacting your business, or the potential of tariffs? How are things impacting your business? So get to know your prospects. How they answer those questions are going to give you a lot of information about what they think is important to them. Again, WIIFM, what's important to that individual. And then you know what specific value propositions you may want to bring up. As example, maybe you're talking to that insurance agent and you're asking them why they got into selling IULs or whole life, or I'll use a real life example. I had a gal years ago that sold term, and let me tell you, she lived and breathed term life insurance. She loved this thing, but most other people don't. And when you go to a networking event and you're talking about death and why you now need to have term insurance, as she would say, people would stop listening because nobody wants to start their day thinking about how they're going to die and how they need to plan for the family. So she never really got a huge amount of leads, despite being a super nice lady, despite being extremely social, and despite the fact that she knew her stuff inside and out. My goodness, I've never seen somebody know so much information about term. She knew it in and out. But again, she didn't make any sales because that wasn't really the best icebreaker. So she became an agent of UFF, and she began with introducing the Money Max account and assisting people in paying off debt. And then she would cross sell into term because, again, that was her excitement. That was her passion. That was really where she shined, was selling term. but she got in front of people and started that business because she started with the conversation of MMA. She was really struggling in that respective field and really struggling in creating a database and creating a clientele because people didn't want to talk to her about term or talk to her about death. And so, again, starting with the MMA conversation and showing people how to accelerate the payoff of debt so that they could leave their heirs or their benefactors in a better financial position was a great way to segment then into, by the way, what are you doing in terms of preparing for when you do leave Earth? What are you planning to do? And so it gave her that opportunity to cross sell into other areas. So getting to know your prospect and getting to know what's important to them is a critical piece of the pie. It's really about knowing what's important to them, so that you can keep WIIFM in mind as you talk to them. And that's going to help you close them. I've recruited over 350 agents for a reason, because it's all about that person. What's in it for them, not what's in it for me. I'm irrelevant. I need to keep my agenda off the table. It's about what's important to this person in front of me. So you have to ask questions to get to know that. Now, if you are not targeting insurance agents, I do want to have you sit down and say, okay, for my specific target market, assuming you have one, if you have one, why would somebody in this industry want to become an agent? What would be important to them? Why, how, what, how are they going to make their business better? Is this something related that they can increase their core business? Remember, the three biggest reasons why people become an agent is they want to enhance their core business, they are looking for a plan B, or they want to join a crusade, something bigger and better than themselves. They need to feel a part of a mission where they're making an affecting change. So why would somebody in this specific target market want to become an agent? Now, if you don't have a target market, you can still do that. You can sit down and just ask yourself, why would anybody really want to become an agent? Why am I an agent? What are the things that are important to me to become an agent? Write them down. Create a list of those reasons. These are called value propositions. Why would somebody in that specific target market or somebody in general want to become an agent? Why? What would be important to them? How is this going to be important? So create that list of value propositions. Never give it to the prospect. This is for you. What I like to do is I like to create that list of value propositions. I read through it prior to my appointment, so it's nice and fresh in my mind. I might even print it out so that when I'm speaking with somebody, I can just check it off and remember to go back and revisit those items. And quite frankly, sometimes when I'm meeting with people, they come up with things I never would have thought of. That's even, I love it when that happens. That's like the best meeting ever, where when I ask them, hey, would you like best about what they saw? They start coming up with things that I never even thought of, even when I've been in the industry. It's been fabulous. So create that list of value propositions. It's a living, breathing document that will adjust and change and grow as you talk to people and as you are introduced to more potential value propositions. So continue it growing. And again, the way I like to approach those value propositions is in the form of a question. I'm going to show you some questions that I use often for insurance agents, and then we'll get into the value propositions that they're related to. So when you are meeting with somebody, whether it's the initial conversation or that follow-up appointment, always have them speak first and you speak second. Practice the 80-20 rule, where you're asking lots of questions, speaking less, and they're speaking more. They should be speaking about 80% of the time, especially in that initial conversation, and you're only speaking about 20% of the time. Now, in your follow-up appointment, that's going to shift a bit. You're going to be speaking a little bit more, but you still want them to talk as much as possible. The more they talk, the smarter you look, the more rapport that is built, and the more they're selling themselves. So remember, less is more, and let them do as much talking as they possibly can. Now, that said, when you are dealing with a type A, maybe they're a CEO of a company, you may have to adjust that a little bit. When you have a very type A individual, they don't like chit chat. They want to get down to business and they just want to get stuff done. They want to know, is this for me or not? So get to the point and get to it quickly. So insurance agents, there are quite a few type A's out there. Not a huge amount. You're going to find more probably in the financial services world, but there are quite a bit of type A's out there. So you need to be careful about that. Know the type of person that you're speaking with and adjust your presentation accordingly. Adjust how you talk to them accordingly. It's not about how you are and your personality. It's about about how the person is in front of you. Remember, WIIFM. If that person's a very direct person, they want and expect direct answers, you need to answer that way regardless of your comfort level, because it's not about you, it's about them. So with that in mind, let's talk about insurance agents. So first, we're going to start with a couple side notes about insurance agents. There's a ton of different insurance agents out there. So you have property and casualty, or P&C. You have life. They could be securities licensed in life. So they're selling not only in index universal life product or whole life product in term, but maybe now they're actually doing security products in insurance. So in the insurance world, there is quite a few that actually target and focus on financial services and planning because they are securities licensed, or I've never been securities licensed, but I helped and I quite frankly owned part of a financial services company where other people were licensed and some were not, like myself, but we still worked on financial service products in that we did the IBC, the infinite banking concept. We did a lot of the using your own bank and creating your own banking system and using the MMA to create that velocity banking type thing. So we did that a lot. And there are a lot of people out there that do work, that are insurance licensed, that work in financial services, that don't really act more in the traditional P&C or property and casualty licensing. With that, you will want to really target a lot of the value propositions that are unique to the financial services person. You're going to shift a little bit more to that as opposed to the life insurance agent or the P&C agent. Also know that, like I said, some insurance agents are securities licensed. In the securities world, if you have a securities license, you actually have to hang that license at a brokerage, and your broker who runs it, the manager, will determine whether or not you can actually receive outside forms of income. You are required to disclose where you've received all of your income, and the broker can say, you know what? Nope, you may not represent UFF anymore. You may not get a single bit of penny. You may not do that at all. They have that right to do that. What we've found over the years of doing this is that generally, and again, there's always exceptions to every rule, but generally, your larger brokerage firms will typically not allow their agents to sell the United Financial Freedom product. They will not allow them to sell the MMA and have that be an additional source of income. However, the smaller mom and pop shops or the more regional finance companies, they're more likely to allow their staff or their agents to sell the product. It is something that the broker must approve. So don't be surprised if somebody tells you that. I've had plenty of agents call me up and say, hold on, they said that their broker has to approve it. What do you mean their broker has to approve it? It's legit, man. If they have a securities license, that's legit. They have to have approval for that. So don't be surprised, be prepared for that. Now, when it is a larger broker, and if the broker says no, which will happen, I've had it happen plenty of times to me, you can look at being creative with it. You have to be careful. You can't get that person in trouble. You can't put them in a position where they could lose their securities license. But most see the value and want to be able to provide this level of service for people to some extent or somehow, some way. So sometimes a family member may become the UFF agent, and so they refer over to the family member, and then the family member gets paid, and then there's no conflict because they're not a part of it. They've just done a referral. They may have their spouse do it. They may, you may not send them a card in the mail that has a $200 Visa card in it. I mean, don't do that. That'd be bad, right? Don't do that. That'd be a conflict because that's not really income, but it kind of is. So you can get creative with some things, but just really be careful about putting them in a position that will get them in trouble. And they will know it's up to them. And they're big boys and girls, so they can make the decisions for themselves. But also remember and remind them, we spoke about this last week. 95% of people that work with individuals on finances do not offer full spectrum financial advising, meaning most typically look at the assets of somebody and try to reposition those assets to make more money, thereby increasing their net worth. However, Net worth is the combination of assets minus liabilities. So most people, 95% of people, do not ever touch the liabilities. They never show their clients how to pay off debt. So of the 5% that do, that say, yep, you need to pay off debt, very few actually have a plan. They may say, hey, you know what? If you have an extra 50 bucks, 100 bucks, send it over to a specific debt. And once you get it paid off, then you roll it over to another one. That's a start. Hey, I'm glad they're suggesting something. They're actually saying, hey, you've got debt. This is a problem. We need to find a solution for that debt. So they're helping them to do that. But it may not be the best plan. Over the years, we found that accountability is one of the most important aspects of actually getting out of debt. And obviously, our system provides that accountability, and it provides that education. It provides that path to actually see that there is a light at the end of the tunnel. See that that if they're making sacrifices, there's a reason. They're going to get to that solution at some point soon. They know when they're going to be debt free. They can see the impact of every single financial decision. When they decide not to go to Starbucks for a coffee, they can see how that impacts their finances, and they have better accountability, and they're more focused on actually getting out of debt. So our system actually has a lot of accountability to it, which helps people be more successful. So of those 5% that do offer some form of debt planning or paying off debt planning, we have a plan that will help do what they're due, but on steroids. It's going to help them quite a bit. And one day I'll learn how to speak correctly. Who knew? So these are some of the questions that I tend to ask some people. Hey, what area of insurance do you specialize in? Don't assume that they do financial services in any part. They may not. Maybe they are all about property and casualty. Maybe they are P&C, but property and casualty, but they want to break into the insurance world, where they break into not just selling term, which a lot of them do, but now they want to get into how can we use a cash value insurance product where I can help people start planning for their future financial needs. So ask about their area of specialty in the insurance world. Ask them, hey, do you ever have clients who state they can't afford your monthly services? I can tell you, when I first got out of college, my insurance agent, I took over my parents. My parents gave me their insurance agent. I had been using them since, well, quite frankly, I was 9 when we moved to Tucson. So I knew their kids growing up, and of course went with them. Well, I couldn't afford the services and the products that they said I needed. Oh, Joni, you need an umbrella. What the heck is that? I don't know. I can't afford that. $100 a month? No, I want to eat this month. I can't do that. So yeah, there's of course going to be people that state they can't afford the monthly services, whether it be an umbrella, maybe it be a higher insurance, life insurance. Maybe it's even just to have the proper coverage on their vehicles. Many people cannot afford to pay for the services that the insurance agent is recommending. So you might ask instead, hey, do you have people who turn down needed products such as life insurance or umbrella because they not afford the monthly payments? What do you do with those people? What's the main reason why you can't help them? That's a critical question. You want the insurance agent to voice as much as possible. You want them to say, well, the biggest reason is they don't have cash flow. They don't have the extra money to pay for it. That's a critical piece if you can get them to say it instead of you saying it. Now, you can follow up with, well, what if you could get them in a position where you could free up some of their cash flow so that they could afford some of those otherwise unaffordable products? Would that help you sell more product? Would you be more valuable to your clients? Do you think you'd get more referrals? 100%. Yes, yes, and yes. So it's about asking those questions to guide them to that value proposition. How do you determine if people are properly covered with your services? For example, do they have enough umbrella coverage, auto coverage, home insurance? Do they have enough renter's insurance? Do they have enough insurance to cover their jewelry? How do you determine if people are properly covered? Why would you ask that? Well, obviously, because you want to help build their core business. If they don't know for sure if they're providing enough coverage for services, then they don't know if they're providing the right information. Yes, they do, of course, ask data questions, and they have questions that they're going to ask to get to know that person to find out that. But what if they could simply open up a system? What if they could open up a website that lists all of their income and all of their debt, which is assets, so that they can determine, well, debt is not an asset, but the debts are related to an asset. So now they can really determine, do you have enough coverage on that house or on all of the cars? Or maybe they have a boat that you didn't know about, or they have an RV, or maybe they have dirt bikes, or whatever it may be. You can, because they have debt on those items, you can now open up the system, see where those debts are and the corresponding assets to it. Do you help people with finances? Again, you need to ask, are they a part? Do they solely do P&C? Do they do other things? So do you help people with finances? And maybe they are P&C, but they're trying to break into that insurance world or into the world where they're helping people. So ask them, do you find it challenging? Because unfortunately, if somebody's used to being, I hate to say pigeonholed, but pigeonholed into doing P&C, it is hard to break into the world of finances. Most of my friends that have done P&C that have wanted to get into financial services in terms of IULs and whole life and those cash value products, they have a really hard time. They have a great book of business, but they have a really hard time breaking into it. So again, it's about asking questions about them. So would it be helpful to have something in place that's going to help give you a snapshot into their finances? That's the MMA, right? You can open it up and get a snapshot into their finances. Now you know whether or not they have enough for property and casualty, but also, do they have money that they maybe need to redirect into a whole life policy? Maybe they need to start an infinite banking concept policy. Maybe they need to start an MMA Pro. Whatever it may be, now you can start really digging into that. And that helps that person transition from just looking at their P&C into actually becoming a trusted advisor for their financial services. If they do assist with finances, would you be able to help your clients build more wealth if they had more money to invest? Would you be able to sell more product if you could free up some of their cash flow? Would your clients benefit? Would it help your clients to have a 34.5% increase in their cash flow? Where do I get that number? Nelson Nash, who is the author of Becoming Your Own Banker, the Infinite Banking Concept, or IBC, he has done a ton of research, or did a ton of research, and he found this is unfortunately way back when, so this number is higher now, but way back when, and this is what's quoted in the book, is that for every dollar earned, 34.5% of that dollar earned goes to service, interest, and interest alone. It's not even touching principal. This is just interest on their debt. For all of the monies earned in that household, 34.5% is already spent to service interest. If you could get rid of that debt, it's as though that person just had a 34% raise without having to work another job, without having to work more hours. You've freed up more cash flow because you've helped them pay off debt. Now, in running these analyses over the past, I don't know what year we're in, over the past 17 years or so, I can tell you that 34.5% is quite low. We have significantly higher. Obviously, we have lower as well. That's an average that Nelson found. But I would say it's higher now based on what I've looked at and what I've seen over the course of years of doing this. I just had somebody at 60% the other day, 70% the other day. It is higher right now. So by paying off that debt, they get a raise. No additional hours worked, no additional job, just more money they get to keep in their pocket. Would that be beneficial to your clients? Yeah. Could they buy more P&C? Could they buy that unaffordable umbrella policy? Why, yes, they could. What do you do to help your clients with debt? How do you differentiate yourself from other financial advisors and or insurance agents? That's kind of a really important question as well. If you attend networking events, you know that the two most common professions there are financial services and realtors. You're going to find them everywhere. So for financial services, if they're an insurance agent, they need to differentiate themselves. But guess what? There's also a ton of P&C agents out there too, whether it's a business insurance agent or a P&C, they're also attending a ton of networking groups. They're always looking for leads. They're always looking for people to assist. So how do you differentiate yourself from the other 5 insurance agents that are in the room right now? It's a key differentiator. Remember how my friend years ago who wanted to sell term to everybody could not sell a single thing until she became an MMA agent. So she differentiated herself from the other agents and quite frankly from herself by selling the MMA first and then cross-selling into the insurance world. So it helped build her core business while providing a plan B, which was not something she was looking for. But she believed in the crusade and she believed in the term. Now she solely sells term. She loves it so much. So here are some of the value propositions that we have. Again, there's more than what we have listed here, but we're just going to go through some of them. So you can create more first appointment opportunities. Remember my friend about term. So it's a unique competitive advantage over competition. It's a value-added advantage in meetings with clients because I guarantee you, remember, if only 5% of financial advisors are talking about full spectrum plannings and helping their clients pay off debt, how many insurance agents are helping their clients pay off debt? Now, one would think, well, gosh, if they don't owe as much on their house, then they don't need to be insured as much. Well, guess what? People that are freeing up cash flow don't mind spending the money and would rather have the opportunity to sleep at night and pay for that insurance so that they know that if their house were to catch on fire, they could have it rebuilt. I hate to say this, but my neighbor's house, about 7 houses down the street, their house completely demolished by fire. So you never know when that's going to happen. So even if they are freeing up their equity and they're paying down that mortgage, no, they're not going to stop wanting the coverage that's needed for their house. They're still going to cover it based on what the value of the house is, not what they owe. Increase retention of clients. Have a stronger value-added conversation with clients. It's a great way to cross-sell or to really transition into selling financial services on top of that P&C so they can expand their business, they can expand their offerings, they can expand their revenue streams, they can increase referrals. They will get more referrals for this program that they can then cross-sell into their core business than they will ever get for the insurance itself. It's a better door opener. People don't typically want to talk about insurance. In fact, when I was doing a lot of insurance sales, I was trained by Nelson Nash, and Nelson used to say, "Hey, never call it insurance. Call it an IRC 7702." When I got trained from my specific IMO, they were also saying the same thing. Hey, call it an IRC 7702. Never, ever, ever call it insurance. Now, Nelson never shied away from it being insurance. Don't take that the wrong way. He was very upfront about it being insurance. And if you read his book, he's very upfront. But it was always referred to as IRC 7702 so that people did not shy away from insurance. The reality is, though, something bad has to happen in order to benefit from that insurance, typically. Obviously, that's different when you get to the cash value, when you're starting to actually use it as your own banking system. But people don't typically want to talk about insurance. So it's an ultimate equalizer. It's something most people want to or need to talk about. They need to get out of debt. People want to plan for their future financial needs, but they're overwhelmed with debt because they don't have the extra money. So it opens more doors. You can accelerate your lead and referral networks. Have I mentioned more and more referrals? I don't think I say that enough in the other trainings. They will get referrals solely for the MMA, for which they can then cross-sell. Distinguish yourself from your competition. Like I said, there's tons and tons of competition. The system is like having a financial advisor in their clients' homes, available 24/7. If you ask somebody in financial services, and again, this goes back to if that person is providing financial services and doing those cash value policies and or security policies, then you'll find if you ask them, what's your biggest challenge with clients? And most will say, number one, lead source, but number two, education and accountability for finances. People don't know about finances and they make poor choices accordingly. So this is a great way to educate their clients about finances, whether they're doing financial services or not. So it educates their clients about finances. They can see the true cause and effect of every decision that they make financially. They get an innate training. When they see that cause and effect of every financial decision that they make, people start making better decisions with their finances. And so they actually ultimately do better than the original forecast for payoff. They can help clients stay focused on achieving their goals and accountable to their goals. Again, that's one of the biggest things that financial advisors have issues with is the accountability for the plan. This is one of the best accountability plans out there. Change the way they look at their financial decisions. It increases legacy planning, the bequeathing of assets to the beneficiaries. Remember, net worth is assets minus liabilities. If that person's solely looking at assets and increasing assets, then when that, let's say it's a house, let's say that they have a $200,000 house that the person wants to give to their child upon their death. Well, if they are just paying off their mortgage in a traditional sense, maybe they only get down to owing 180. Now the child, the parent unfortunately passes away. Term insurance may or may not come in, who knows? But now the child receives this house with a $180,000 debt. Who knows if the child can qualify for their own mortgage? Who knows if the child can even pay that extra mortgage? Do they have the financial capability? But if they could, so it's not enough to just concentrate on assets. You've got to look at the liabilities. You've got to look at the debt and get it paid down so that the assets are better when they are transferred to the beneficiaries. So let's say they use the system and now they, instead of owing 180,000 at that time, now maybe they only owe 80,000. Even if the child could not afford a new mortgage, they could at least put it on the market. And guess what? They sold it. If it were truly valued at 200,000, they wanted to have a quick sale. They could sell it for 190. They could sell it for 180, and they just made 100 grand. So now they're truly bequeathing assets to their beneficiary. They're truly providing for their children and their children's future's needs. They're truly creating net worth, and they're truly creating an opportunity for their families to have a better opportunity at wealth. It's a legitimate way to review and transition to your client's financial security. Is he or she doing enough for his family? Introduce needed life insurance, umbrella policies, increase insurance coverage. Are there other financial tools that would be more effective for them? Now you can cross-sell. You get to increase their true net worth. Create client access to capital for insurance products and future financial needs. Help your clients reduce debt. Give them a raise. More money to invest, more money to pay for those needed insurance products. Like I couldn't even afford umbrella. That extra $100, I couldn't afford it when I got out of school. I was already eating top ramen. Oh my gosh, that was gross. My son loves it, by the way. I don't know how he likes it, but dang, he likes himself some top ramen. Anywho, value-added product to an existing BOB, that's book of business. You can generate sizable new income for yourself as you help your clients rid themselves of their greatest debt. Create new energy and leads from the existing database. This goes back to one of the original questions. Hey, how long have you been in business, or how long have you been in this industry? This is going to tell you, is this something where they have an existing book of business and you can talk about, hey, you've been in business for a few years. What do you do to get back in front of them? How do you create a new energy for them? What if you had a new product line that you could provide for them that's going to tackle the number one industry on their mind? Now, if somebody's new to the insurance world, you're not going to talk about going back to their existing client base because they don't have one. So you have to get to know them to know which value propositions to bring up. It's a good way to get back in front of your clients. Many clients decline an annual review. And quite frankly, if they have the MMA, it's going to increase the likelihood of having an annual review. And when you do meet with them, you can simply say, open up your MMA. Let's take a peek at where you're at with everything. Let's make sure that we have the proper coverage, that we're doing everything that we can. And by the way, did you know that if you have some extra cash over here and I see that you have an extra $1,000 in your discretionary income, maybe we reposition 600 of it over into an IUL or a whole life policy so we can start planning for your future financial needs. Now they're converting over to the financial services side as well. Ask, receive more referrals, increase income from the same book of business, create more qualified prospects and leads. No client left behind. Remember, one of the questions we asked, do you have any clients that can't afford to buy some needed products? That was me. Well, yes. So now they can show how their clients, how to develop some of the discretionary income so that they can free up cash, and now they can purchase some of that otherwise unaffordable insurance products that that person needs. So they're getting the proper insurance coverage because they've paid off debt, they've freed up cash flow, and now they can afford the product. Again, increase client cash flow, net worth, become a trusted advisor, consultant, potentially save your clients from short sales or foreclosures. Do you think the P&C agent makes more money if they do renter's insurance or home insurance? Home insurance, I'll answer that for you. They make a lot more money on the home insurance policy. So it's better for the insurance agent if that client actually retains their house and doesn't have to go through a short sale or foreclosure. Now, sometimes people have to sell, but what if they could retain their house, sell the house, and then have money still for a down payment on a new house? Well, they were able to build up equity in their property so they didn't have to short sale or foreclose. They actually have some extra money left over on that sale, and now they can actually go put it down on a new house. So now they're no longer going to be a renter, or they won't have to go down to become, not down, they don't have to transition to become a renter and do renter's insurance. They can maintain homeowner's insurance. Show your clients how to build equity even in a declining market. Increase your bottom line and revenue. Have an almost fail-safe door opener. The reality is, though, guys, if you don't, your competition will. Remember, always ask questions to get to know your prospect, find out what's important to them, and then align our value propositions to what's important to them. They're going to tell you exactly what they need to hear if you ask questions and if you listen. Remember that people join as an agent for typically one of three reasons: to enhance their core business, to have a plan B, and or to join a crusade, to be a part of something bigger than themselves. I want to challenge you to integrate UFF into your daily life. Have it become a part of who you are. It's uncomfortable if you haven't done it before, but if you want results you've never gotten, you have to do things you've never done. So lean into that discomfort and start doing something for yourself, your family, and for other people's families as well. So no surprise to what your action items are for the week. I want to challenge you to speak to a minimum of 3 insurance agents or prospective agents this week. If you're not going after insurance agents, that's okay. Talk to 3 prospective agents this week. Follow the sequence of the recruiting cycle. Input information from this call into there, ask questions, find out what's important to them, have your value propositions ready to go, share your story, share the average person in your state if you've ran an analysis on the average person in your state. Remember to have daily action. You need to pick up the phone every single day. And that can be uncomfortable, but the more you pick up the phone, the easier it is to pick up, the easier it is those conversations become. So those are your action items for the week. Leaders, anything you'd like to add? Kevin, Dale. And Dale, I wanted to
Well, Joan,
go for it.
hey, Joan,
Hey.
when you look at the big picture as an insurance agent and you talk to your clients a lot and they tell you there's a common theme. Well, I know I need long-term care, but I can't afford it. Or I know I need life insurance, but I can't afford it. That's the reality we live in today. But what if I'm able to help you reduce your debt in the fastest time possible? I am then creating the income needed to afford the goods and services later on down the line. So as an insurance agent, I see that if I can incorporate this into my client's financial plan, I will then capitalize on future goods and services with that client and a healthier business relationship.
100%. Excellent. Thank you. Dale, I was going to ask you, I know you probably have comments, but I also wanted to have you chat about the MMA Pro a little bit as well.
Okay. Thank you for the opportunity. Joan, is there any particular aspect that you would like me to focus on?
First, start with what it is, and then say why
Okay.
we'd want to talk about that in the insurance world. And since we're talking about recruiting the insurance agent, why and how is that going to be something that would be beneficial for them as an insurance agent?
Okay. Okay. Well, I can start out by telling you that I came back to United Financial Freedom. The name was different at the time. About 10 years ago, specifically, or as a result of an announcement that indicated that the company was pursuing a relationship with a major life insurance carrier where we would be able to integrate the MMA with the IUL. And that is essentially what the MMA Pro is. It is an integration of a life insurance product now using a life insurance product rather than your savings or checking account or HELOC as what is it called?
Facilitating account.
The facilitating account. So I think that's a pretty good explanation of what makes the MMA Pro say different from the M&A. Now for the insurance agent, what I like about working with insurance agents or pursuing insurance agents is that because I'm from the industry, clearly I have relationships with a number of insurance agents out there. And before the MMA, when I approached another insurance agent, it was either a conversation about them leaving their place of employment or the agency that they were with, or me leaving the agency I was with. And therefore, it made for a really tough conversation. Nobody really wanted to be the one to leave where they were. However, now with the MMA, you can approach another insurance agent in this example without threatening them, with having to relocate or come over to your organization. You can talk to them about a neutral product that you can both use and help your clients more effectively without relocating, without changing anything about where you do most of your, where you work. So I think that's a tremendous selling point. And an additional selling point I'd like to make is that, especially when it comes to agents who focus on IUL, with the MMA, you can show an agent who's currently selling the IUL how to help their clients as much as double their income in retirement from their insurance policy by partnering with the MMA. And in the case of an MMA Pro, quadrupling what that client can potentially make in retirement from income from that policy. So I think those are both very good selling points. And one last thing is, now that we have the affiliate program, that might give us a little more leverage or make doing business with other insurance agents or with an agency even easier, because they can either be an affiliate as opposed to having to become an agent, or they could have an extended family member become an affiliate, because as an affiliate, all you have to do is point the person back toward the agent who owns the affiliate relationship. I'll stop with that, Joan. I hope that was helpful.
That was very, very, very helpful. Thank you so much, Dale. Thank you, Kevin. I appreciate you both very much. I don't see any questions that have come in. Dale did write in there that it was mentioned in the Rise and Shine call this morning that Lynn Spencer hosts a call on Tuesday evenings at 8 p.m. Eastern. Invitation is extended to everyone who would like to attend. URL is https://meeting.financial. And that's at 8 o'clock on Tuesday. So that's tonight at 8 p.m. meeting.financial. So again, thank you for joining us. Next week, Dale brought up affiliate programs. We're going to talk about the differences between the affiliate program and becoming an agent. So we'll talk about that in detail next week. And thank you again for joining us. I hope, I'm sorry. I just saw that Kai was on. I'm going to move him over. Kai, is there anything you'd like to add before we end the call today? Putting him on the spot
Joan,
too. Yes, sir.
as someone who's been through the, recruiting phases with being recruited by different IMOs, insurance marketing organizations, they really don't have much to offer that's different from anybody else. And that's where I think, we really can differentiate ourselves by providing something truly unique in the marketplace. So sorry I was late, had another call that just ran a lot longer than I expected.
Things happen. It's all good. Thank you, Kai, for that. I appreciate it. So again, thank you, leaders. Appreciate you all. We will see you on the call next week. Again, we're talking about affiliate versus agent. So see you on the call next week. Have an amazing week. Bye-bye.
Thank you, Joan.